This podcast is distributed for general informational and educational purposes only and is not intended to constitute legal, tax, accounting, or investment advice. The information, opinions, and views contained herein are our own and may be subject to change at any time without prior notice. All investment strategies and investment involve risk of loss. Any reference in investment, past, or potential performance is not and should not be construed as a recommendation or as a guarantee of any specific outcome or profit. Hey everybody, welcome to Venue Ventures. It is the Jeremy, Jwinn, and Nate Harper show to start this off again. It's been a couple weeks, and I know you guys have been missing us. So
Yeah.
we're just going to ramble about a bunch of random stuff.
Well, nothing's happened in the last 2 weeks, so that's the good news, right? Nothing has happened.
No, not GME,
AMC,
craziness, the Wall Street bets crew. I mean, that stuff's been insane.
I caught a little bit of that with the NAKD Naked, the Naked Holdings.
Yeah, you did.
Well, that was one that I think you had posted.
A long time ago.
Well, I bought back in November. You're like, oh, it's time to buy. And so I bought. And then I think I sold half of it the next day because it jumped right after you said buy, which is your picks on everything. They always jump right after you buy them.
Because I'm a short-term guy. I'm not a long-term guy.
It's almost, you can almost guarantee if Nate says to pick it up right then. And then from there, you're looking at either an easy doubling within the first 24 hours or a tripling. Those are the only options. It never goes down, always up.
If only. This is one that I posted in the Discord too. Spectrum Global Solutions. And you know what we're going to do today? We're going to find out what this is because every time I post it, I'm like, guess what? I have no clue what this is, what they do. I don't know their financials, nothing. But guess what? I bought this and it's
off the penny pile.
Yeah, I didn't even know how I found it. I was like, what was it again? I didn't even know the name.
SGSI.
Spectrum Global Solutions.
They probably said something about blockchain or
it was
usually those are the key indicators for them to shoot upwards.
Well, something came through on my my personal Twitter account, which I never use. I have it up on my tweet deck.
It's a communications company. That's why you're big into the communication companies. Those are your.
Okay. Let's see. Oh, you know what? I do remember a little bit. I think they have something to do with 5G.
Oh, probably.
So they caused COVID. I think that was right. Oh, I probably can't say that on the podcast. That was a joke. Sorry. I do not believe 5G causes COVID, but some people do. Who knows? There you go. So, all right. It's I think it was something about 5G. They're obviously they were tiny little. They were below a penny? No, below 10 cents. So I think my average was in right around 10-ish cents or something like that. And then, like you said, it literally blew up like within a day or two.
Whenever you say buy, it's time to buy. And then from there, you just kind of debate whether or not you want to double or triple your money after Nate says buy.
Well, something like this, I sold half. Like as soon as it doubled, I just sold half of it, just let the rest ride. I think it's up 350-ish% from when I got in. So.
Yeah, and that's basically the play that I did with Naked. Was you said buy time, and so then the next day it went up, and so I sold half of it and basically covered my expenditures for entry, and then I was like, well, let's see how this thing goes, and then it promptly did a little dance, and then
there's this thing. Nobody could sell up here, right? Wasn't this is when everything was like, this is the thing that kills me. So the whole situation, and I'm sure everybody's heard it a million times, but they come in and they're pushing up the stocks however they're doing it, whether it's a pump and dump, whether they're trying to screw the short sellers, but in a situation like this, somebody who bought it beforehand, had nothing to do with the pump and dump, is in it and is looking to take profit, but could not either get into their exchange. I know I tried. I had Robinhood, Charles Schwab, and Fidelity one morning trying to get into some stuff, and I couldn't get into any of them.
Yeah.
Fidelity came up the quickest,
and
then Schwab, and then Robinhood, limps along in the background. But
mine was an Ally. Yeah. So Ally it was after all those other ones got their the hamster wheels moving along, that they were able to, that Ally finally got their act in gear. And it was, I sold it at a market sale, a few of them. I think it wasn't my whole remaining of the holdings. I think I sold a quarter of my holdings.
Do you still own some of it?
Yeah, okay. I still own. And I'll continue to own it just because of fact.
Forever.
I want to see how high it's going to go. I want to see if it's something that can go up to a larger number than where it's at. But I've already made, I don't know, a lot more than what I would normally make on a typical holding. Yeah. And so if I was in at 0.1478. Was where my entry point was. And so I sold a quarter of my remaining holdings that I had after I sold the half. So I don't know what the fractional holdership is, but anyways, sold a quarter of the remaining once I could gain access through Ally at $1.42. And that was just a market sale. And then from there, I just basically have limit sales or stop, stop loss sales set out to higher points that are situated there. That way,
you have take profits.
Yeah, well,
you have them up higher or down lower?
No, up higher.
Those are take profits.
My take
down lower is a stop loss.
I don't set stop losses
because you're stopping your loss.
There's no losses right now. I'm already up.
Only lose when you sell.
Only lose when you sell, baby. So it's like I'm gonna set this up so if it goes on another one of these runs and I don't have access, those sell orders are in place. Hopefully. Now I did get a notice from Ally. The day after, or when you couldn't gain access, they had erased all those good till cancel.
Really?
Yeah, they put out a notice saying all good to cancel notice or sales are eliminated off their books, and that was the day after.
Oh my gosh!
It was like the 26th, I want to say, or 27th. One of those days there where they had put that notice on their investment site on Ally. Now I don't know if that transferred over to Robinhood or to your accounts, but for Ally at least. If you had put in a good till cancel prior to that, they wiped those off the books. So you got to go back in and you got to reset those and that type of stuff. So I think part of that was in response to how the craziness that was.
Well, let's look at GME. I mean, I know Robinhood. I mean, there was rumors. I don't know exactly what they did because I wasn't in on GME or anything along those lines, so I didn't get anything outside of the fact that I heard that they were limiting the amount of stocks you can buy. And then they also took the ability to buy them at all away for a little bit, and you can only sell them. What is that going to do with the price? You can only sell something. I don't know. It's gonna go down. So, I mean, you can see this epic drop. This is in a week time frame. Let's look at it on the daily. Can you see a little more of the action?
Yeah.
It's got quite a bit of buy.
Yeah,
buy is coming in right now, which is interesting.
It's people that hold on to the idea that it's still something that is going to go on, and there's going to be those people that continually try to keep it going and keep the run going, right? I mean, the people that read a blog that says, "Oh, don't believe what you're hearing; it's still good," because it.
Yeah, are they going to keep it going?
How can they? I mean, with any of these, you got to look at. Eventually, it's going to come down to there's foolishness that's involved with thinking that the fundamentals don't matter.
Look,
right?
100%. Well, I'd argue the fact that fundamentals don't matter in a lot of things. I mean, if you look into it, SGSI. I mean, look, I like fundamentals for certain holdings of mine. Like, obviously,
that's true. It comes back to, I guess, the mindset of where you're at. If you're looking to hold it for a shorter time frame or a longer time frame. Well, longer time frame, obviously, fundamentals would matter in that regard.
Well, in GameStop, in all honesty, I don't think they had any debt or very little if they did. I mean, that was why I traded them a long time ago back in the summer they were a debt-free company. They were kind of putting in a little bit of a bottom. They had some different ideas that they were coming out to change the way that they operated. And I was like, well, there's some decent fundamentals. And then the trade was looking good too on the technical side. So, I mean, there's definitely fundamentals that go into it, but I mean,
is it something that's sustainable above $20 billion for a company that generates?
This had nothing to do with fundamentals whatsoever.
No. This was a short sale or a short squeeze on trying to get back at the big man. But I, in all honesty, I don't know how much they really got back at the big man because all those hedge funds, is that their own money that they're using for these?
That's why they were leveraged over.
Yeah, but even if going beyond that, those people that go and give their money to hedge funds, the majority of the money that these hedge funds are playing with isn't their own personal money. It's not like...
Well, it wasn't even investor money. It was like loans
from investor money, right?
Well, I mean, banks. Like they were, from what I understand, as part of this, they were using leverage, like you or I would use leverage because they had investor money. They had X amount of dollars in investor money, which then banks will say, oh, we'll loan you X amount of money for whatever. So I think from there, what they did is they leveraged that into a lot of these shorts and whatever was going on. So they were over leveraged, which at that point in time, now you have your client's money, and then you have all this leverage that's going out there. And if it keeps coming down, you have to be able to pay the piper, because there's interest payments on it. There's the fact that you're coming to a margin call. You don't have enough to cover whatever you're out. And I read some absurd, I don't know the exact number, absurd amount that they were 300% leveraged over on this. Something crazy. So it's like, part of me is, and it was a naked short on a company that was already depressed down by like however much. Where are you going with this?
Yeah.
But the movement of it I can get behind, because you look at these hedge funds and banks, and everybody got bailed out before, and they were the ones causing this. The big short type of situation in 2008, right? They did the same thing, but they got bailed out, right? Mm-hmm. Nobody else gets bailed out. I'm not going to get bailed out if I over leverage myself and I'm all of a sudden, help me. I can't pay the interest payment on it. It's like, come on.
Well, I guess that brings up another then good point of, if you are going to be investing with leverage, you got to be able to, you got to be able to understand that it could go to zero, and you might be over leveraged. And is that possible with some movements that are out there? Most definitely. It just depends on, are you going on a margin account, or are you going off of the actual cash in account that you have?
And it's managing it, so if you have to take the loss, take the loss. You have to look at what's going on. Like they were so underwater in this trade. Mm-hmm. Like they have to, they were short down here, at $5,
Yeah.
So where are they at? What are they doing? I don't know. I don't know the insides of it. I just know it was a funky deal.
It is. And the whole deal, look at the volume decrease.
Yeah. Well, you'll usually see that after the big sales come through like this, like these huge, this was, giant volume. And then these days the volume's so low, but all you can do is sell or buy one stock of it per person. Like that's what I know Robinhood limited it to. So.
Well, and then I got a notice yesterday from Robinhood saying that, we aren't restricting your sales. Are you pulling up the email now from Robinhood?
Yeah, I have it on mine too.
I found it quite comical, because they're trying to save face in the grand scheme of things, and the fact that they aren't like all the other places that are out there. And in actuality, they are. They're the hand. They're part of the machine that is out there that everybody's rallying against.
I'll just pull it up on here.
Oh, okay.
I don't have a lot in Robinhood, so it's not like I'm
neither do
opening up my Komodo to everybody. Kimono. My Komodo dragon.
Your kimono?
My Komodo is under my kimono.
Hey, that's a lot. There's nothing wrong.
This is, okay, so I took I put $1,000 or $1,100 in there, or $1,000 in there, because we have the, I'll pull it up on here. We have our yearly picks for the Discord.
Yeah.
So I just went on Robinhood and I bought I bought $100 worth of all of them.
Yeah.
I had a little extra left over. And so I was like, I'll just buy Doge.
Doji.
Well, Doge went up a boatload. I sold it, and then I bought back in a little bit lower. So I'm up a decent amount. The actual, I think I posted it yesterday. The yearly picks for the Discord's up like 60 some odd % for the month of January, which was pretty good. So.
Hey, when you get a whole bunch of crazy minds like ours together, we might be able to produce something good,
Yeah. And there's some really good ones. There's only 3 that were down for the month, and there's a couple that were over doubled. One was 200 and some odd %, one was just over 100, and a lot were in the 90s. So.
Well, and the operative word there is after a month.
1 month, 60 some odd % in a month.
Yeah. So can you really be too upset about something being behind or being up so much? After the year is up, you're going to have a better measuring stick. And even then, overall success after a year is not necessarily determined by, how much it went up in the first month or how.
Yeah.
So.
And then on my personal side, because SHIP was mine, I sold half of my SHIP once it doubled. And so I'm just sitting on the rest of it, letting it go. So, but I didn't do that in here. This is the buy and hold theory for the year to see what happens, right? So.
Oh, geez.
Here's the interesting. This is the email from Robinhood. Changes due to ongoing market volatility. Opening new positions in the security listed in the table below is currently allowed, but limited. For more context about the decision to not limit these securities, read our blog, blah, blah, blah. But they have AMC, EXPR, I don't even know what that one is, GME, NAKD, and Nokia. So EXPR, I don't know what that is. I didn't know
it was
that
Express. It was one of the ones.
Oh, is this the one that I'm in?
I don't know.
Is this the one that we're in with Harwin?
No, BB.
No. That I bought beforehand. We have the option in it. The Express. I don't think it's this one.
No, that's in Harwin. It's BB that.
The BB one, but we also had a Express Spas or whatever it was.
Oh, I don't know.
That one was different. Whatever. Anyways, I'm moving along. So AMC, they've upped this, by the way. This changed because GME, you can now buy 100 shares. It used to be 1 share, so they've increased it. So,
well, and thus the price is increasing. Imagine that.
Weird.
It is.
So what they did is they allowed all the sells to come down, so these hedge funds can then exit their positions with minimal loss, or whatever they needed to do to get out. And that's bullshit.
Well, and you look at it, does it change anything for a dumb trader like me? Because I'm not. I told you last week. I think I wrote it on the whole deal when NAKD was going up. It makes me uncomfortable.
Yeah, you were like, my hands are sweating. I don't know what to do here.
I've never been involved with something like this. I mean, you've been involved a lot of times in stuff like this. A lot of other people have. I don't know how to handle myself. If it goes up more than 50% in a day, and it was up like 100 and some odd, it was ridiculous, 400% in a day. Oh. It was stupid. I couldn't handle that type of growth because it's unsustainable growth in my mind.
It was ridiculous.
And it went back to what we were looking at for last week. As we look at the markets as a whole, over the last couple weeks, the overexuberance that we've seen with the commitment to GME, AMC, all these other ones that were listed on the Robinhood stock or Robinhood exchange, it's unsustainable growth for all of those companies as a whole.
Oh.
But then what you had was, if you looked at all the indexes, so your S&P and your NASDAQ and your Dow, from the start of the year until 3 weeks in, I was looking just over my few holdings that I have, the amount of increase that they had for that time frame was just unsustainable for that short a time.
Well, this is the DAC. It's up 5% for the year.
Yeah, for the year.
For the which we should say the month.
For the month, yeah. And so you talk about that type of growth. It's unsustainable. I think, I was calling for a pullback of that 5%.
We went back and touched the yearly open, basically.
Yeah.
Well, not quite. The yearly open was down there. But, so I guess for the year, we're up 7%.
Which was unbelievable. Oh. And you go up to the top of that wick there,
8%.
For a month. On an index like that, yes, you can see that type of growth in a tech field over... It's just not sustainable.
Not for the entire index, though.
Not for the entire
index. That means you're talking about, and granted, you have, I don't know what the number is now, but a small amount of large companies are the biggest portion of the increase in those. But regardless of the way you look at it, that's incredible growth from there. And that's not even, stimulus. This was doing it before the stimulus came through.
Well, you look down there on the bottom right hand corner. You got 43% for a year for the NASDAQ. 6 month is 24%. So 1 year, 43%. That includes that encompasses a major black swan event.
Right. We covered this before, but in March, what was our drop?
A lot.
Can't even look at this one. Where are we at?
That's December.
What year were we? What year are we now?
Oh, it's not even on your screen there. There you go.
Oh, here we go. That's why I'm like, where am I at? I was on the daily. I thought I was still on the weekly. Yeah, 32%.
But what I'm getting at is that these types of huge growth, it's unsustainable for a short-term time frame. So the 7-8% that we saw in less than a month, that's not sustainable for a year-long time frame.
No.
If you look at it, a more manageable amount, I would venture to say, would be in that 20 to 30% on a heavy growth year where we're going to be getting stimulus and a lot of money that's pumping into the system like what we had post-COVID. You can look and see that 30, 40% in a year, but typical would be that 10, 15, maybe 20 on a good year. But to have 8% happen in a month, you're going to have that reaction or that pullback that happened.
Yeah, but look how it reacted. That's in 2 days.
Well, and
it's almost cut it all back in 2 days. So how does that make it? You're getting some of that pressure off, and you're relieving some of the overextension by bringing this down. But it's still overextended. I mean, you can look at, this is one of the reasons why I like the Ichi cloud, is you can see this gap in between here in the cloud. I mean, and it's riding it. It's just keeping that same trend, so everything's looking pretty. Let it keep going. As long as it stays up and above those, I would start to worry once you get the cross of the conversion in the baseline, or the Tenkin and the Kijun is what they're originally called. If they cross, that looks like you're kind of come sideways. Then you might see some more downside. Then you might see that 10%, 15, 20% drop, which you get something like that, that's
buying opportunity.
Well, and it's needed, dude. I mean, it's so.
But we might not get it. I mean, they're talking, coming to a compromise, pushing through overall stimulus. The amounts of money that they're looking to print and keep going into the system right now, you can't really. We're going to have these quick responses that happen, like what we saw at the last week, and then basically, I guess, the recovery. We haven't quite gone back up to the top, but it happens throughout the time frame. So it's not losing your mind. If you've got a good entry point for it, then you're sitting pretty good. But I'm wondering what the sustainability is past a certain time frame. I've been reading, trying to read some books, because I'm definitely not the most knowledgeable when it comes to investing or anything like that, because my simplicity mindset that I have is it's probably more along the lines of Jack Bogle or where you get the Vanguard funds and you just buy those and you time to an index and over the long term you're going to do really well. So I've got that book that I'm reading on and it probably matches up really well with what I think. And those index funds are typically something that are low fees, but they do really well. But I like to be in more of a leveraged index fund, so something that gives you like a 3x or a 2x on those indexes, because if the indexes as a whole are going to be continually going up, then your index funds as a whole are going to be going up by the amount of that leverage that's utilized for them. But you also have to keep in mind that you lose money when you sell. So the key is to not sell, right? So
you only lose or gain money when you sell, right?
That's true.
If you don't
sell... The AUM changes, is basically the amount under management changes over time. Yeah. But then also the compounding of the amount under management happens over time without the sell event happening.
Yeah. I think in terms of AUM, when I do it on my personal side, I consider my AUM everything.
Yes.
So not just my crypto, not just my stocks, but my property, my cash, my all that stuff, because those are all my assets. Cash is my asset too. Like there's times when cash is, cash can be king. It's not now.
No.
But there's times where cash is going to be, or something along those lines is going to be something good to put it into. I don't believe it's now. It's like you said, we just got too much stuff going on. Too much money.
Well, for yourself personally, do you track all those investments, all those everything on like a spreadsheet? Do you keep track of it daily? Because I know for myself, I keep, but it's primarily the investments of either stocks or the limited crypto that I have, or option calls. So for the limited crypto that I have and for the options calls, I can't keep track of that on my personal capital. Personal capital can keep track of just about everything else. For those people that like to keep track of their cash or their bank account holdings, it can keep track of that in addition to whatever type of securities that you would have, normally traded securities outside of options. But I have a Google Sheets or Google Docs that I keep track of everything going back to 2020, and I can look at it on a daily basis. And then I get my percentages on a weekly basis, what I'm up or down, where I started at the start of the year, what the overall tracking is, how far it went down, how far it goes up, or where it's at, just to give myself an overall perspective, because perspective is always interesting. On a bad day, I can look at, okay, well, where was I at 3 weeks ago? Is this really that bad of a thing? Is the NASDAQ dipping below 13K a bad thing? Well, in the grand scheme of things, no, because, 2 months ago it was in 11K or whatever, and the overall affected holdings that I had then I thought were really good, but I didn't know how good they could have been, forecasting into the future type of thing. So keeping that all in perspective, is that something that you keep track of personally on a spreadsheet, or is it just more or less
spreadsheet?
You have a spreadsheet,
but it's not very. I don't try to go too deep in it. It's mainly like what I have, what it's worth, and the hardest one to do for me is my crypto. Because I've been, especially this last probably month, I've just been trading in and out of different altcoins, and it's been awesome, but there's been a lot. So I don't try to post down every trade, because ultimately what I'm going to do, I have a software for my crypto that I'll just upload all my trades into, and it will spit out like, hey, you owe $10 gajillion in taxes, even though you only made $1.
Yeah.
So for me, I just want to see the overall encompassing scope from the top view looking down of like, hey, here's where you're at. I know where I started from.
Yeah.
So it's like, now you're here. But I keep everything on there, including my real estate properties that I have.
Yeah.
Well,
one. Yeah.
My one house.
Well, and I think that's good. I usually do it every day at around that 1 to 2 o'clock time frame. It provides,
you do it every day?
Yeah, every day. I keep it literally on a day. I could go back to any day in 2020 and see exactly how much I had under management.
So you make a new spreadsheet every day?
No, not a spread. I just put the total. So like if you
so you're like, okay, today I was at $100, and then the next day you're at 120.
And then next day 102, and then it goes down to, I'm down to 98. Oh, I'm down to 97. And then I track on that week. Well, how much was I up or down for that week?
Gotcha.
So if it goes up 6%, then I have that over on the side, and then I would look at, well, how much is it for the month or how much is it for the year?
Yeah.
That percentage.
Yeah.
And those are things that I track on a daily basis just to kind of give me perspective on the overall. It calms me a bit.
Yeah.
It provides me some satisfaction in knowing because when you bring in money off the sidelines, I don't track my savings as a part of it, and I don't track my real estate as a part of it because those are numbers that if I have savings, it's typically, I don't like to count that as investments. It doesn't become investment type of stuff for me until I move it into an account that I put either into security or an option or some type of tradable thing. And for my real estate, I'm not looking to buy and sell my house currently. I'm looking to live in my house for a long time. I have locked in for a nice rate and everything like that. And I know that the goal for me is to stay in that location for as long as I can.
Right.
Type of thing. And so that's where my tracking comes down to in that regard. Now, certainly personal capital provides me with some background or some basis on the daily changes, and it's my one go-to source for saying, okay, I have 500 shares of this, and I have 600 shares of this, and it gives me that total, and then I just take whatever limited crypto I have, and I add that on, and then my options that I have, and I add that on. And those two numbers are typically are significantly smaller than what the personal capital numbers are, but it provides me with some guidance, and it helps give me overall market understanding for how I'm doing. In relation to, is everything that I'm doing sustainable for a long term? I don't know. I couldn't tell you. I'm reading another book, The Intelligent Investor by Ben Graham, and that one is. Have you ever read that one?
No.
But it's the one that Warren Buffett recommended, like number one, blah blah blah. Anyways, I bought into it hook, line, and sinker, and I'm 8 chapters in this thing, and the first 8 chapters are talking about bonds. And
so how do you do? Is it you read it to go to sleep?
Oh my God, it is like reading a history book that I've read 5 times. That type of boring.
Oh, that's hilarious.
And so it's talking about year-to-year growth expectations for what a real smart, intelligent investor would expect. So what would you think a typical smart investor would expect for returns on
6%?
It's right in that range, 5 to 7%. And a good bond investor would get that type of return, and that would be better than what the stocks would do for them. Oh. And they go back, obviously it's a little bit dated. The first edition, I think, was written back in 70-something. But it does pile on, and it does provide me with some perspective on what type of knowledge can old-time traders provide me.
Yeah.
What I'm gaining so far is that having perspective on what realistic growth is or should be or was in the past, this is experience that I won't have. I won't have experience with 5 or 6%, although we did with American funds that we had with our initial 401k.
That's why we changed.
We changed it in 2015 because we saw, it was at the end of 2015, getting after a year of having all of our 401k dollars sitting in an American funds, it got us 1%, even though the markets for those years were up 5 to 6%, which goes back to the overall fees and why, if anybody is listening to our podcast or whatever this thing's called,
there's 2 or 3 of them.
Yeah. you should not be having your 401k managed by those people that are taking fees.
Yeah.
If you're listening to this, you are taking at least enough initiative on your own to invest on your own.
That's not financial advice, by the way.
It isn't, but is.
If you decide to do that, that's your own choice. That's what we decided to do.
Well, because everything else is foolish. So
well, and it's, I mean, in this day and age with things going up, but there could be a time when you come back, and it's good to know, the ideas of that book, because, and it may not be bonds that's going to be the safety net. It may not be the treasuries and whatnot that are going to be the ability to hold that 5 to 7%. It may be something completely different, but the idea and the concept of finding those things to have as a safe haven might be there again. I mean, once, we hit a civil war again in the society and everything kind of starts to crumble a little bit, we might kind of revert back to some more like safety net type of stuff. So
I don't know. I honestly, that's where I'm struggling to get through it. I'm hopeful that I will get through it eventually. I'm finding that it doesn't align with my current mindset, but just because it doesn't align with that right now doesn't mean that I shouldn't read it. I've got to challenge myself to understand, or at least develop a mindset for where am I at and why am I there? Why do I invest the way that I invest? Why do you invest the way you invest?
Yeah.
Is it possible that I'm wrong? Yep, 100%. I don't know how to handle huge growth in a short time frame. I don't know how to handle that. I don't know. The only actions that I've done in the past for huge growth in short time frame is to sell half of my holdings and ride the rest of it out until infinity.
And that's a way to do it.
And that's the only thing that I've answered for myself. But as far as answering for, like, is that the right move? I don't know. I hate looking at my biggest mistakes that I've made over the last year have been exiting out of positions.
Yeah.
Any of them. If I bought and sold any of my stuff over the last year, it's been a mistake. Because you can look back on it now, it's worth. The one that sticks out in my mind is Hibble.
Yeah.
It's 4 times where I sold out, and that's less than 6 months ago.
Yeah. I mean, but who was going to look at the growth that we had, though? Nobody could see that either. So, and I mean, what you realize there, though, is to stick to your original investment theory. And, you tried something out, and in your eyes, you made a mistake, and that's what you don't want to do in the future. And that's great because you learned something. If you never did that, you never would have learned it. Maybe somewhere down the road, maybe it would have been a bigger mistake. So you look at that, and it's like, great. It went that way for you. And now, I mean, you're sitting fine. It's not like you really did anything bad. And overall, when you look at all the rest of your holdings, so.
Well, and that's the whole scope of things. When you look at, if somebody were looking to play the current market on what we have going on, tying back into the GMEs or the AMCs and all those other types of holdings, I don't know, for me personally, that I feel comfortable riding these. I don't even know what you call them.
They're pump and dumps. It's a pump and dump.
Because I wouldn't know when to get in. I wouldn't know when to get out. I wouldn't know, who's the one that's leading the charge on these things and who's the one that's pulling the trigger on getting out.
That's when you look at, if you're in something like this, let's look at Doge, because Doge is a classic, basically pump and dump for years. Well, this one's on the US dollar. Let me go back to the BTC, just because whenever I talk about it on the Discord or anything else, actually I don't want it keep changing it. Sorry guys. Just because I need a little bit more longer time frame. So if we look at, this is in the Discord, this is well before this last pump. So when you look at these things, when I say pump and dump, it goes up and then it drops down fairly fast and it goes back down to almost where you bought it. Okay. In a buy and hold scenario, in this situation, in this type of indice, makes 0 sense to buy and hold it, especially if you bought here and you held it here, it just went back down to where you're at, right into this green zone. When I told everybody, if it's around that 20 sat range, that's when you start to stack it up. That's when you start to build it up, because it'll run again. It'll run again, and even right here, I started stacking it in this range, and then when it came down into the green, I bought a boatload. Did I see the Wall Street bets, jumping into Doge to make it run a gajillion percent? No, because this was the largest daily candle that it had ever had. My theory, which was buy at 20 sats, sell at 100 sats, buy and sell at 100 sats, basically going into it. Just know it's going to pump and know you're just using it purely as a cash. You're just cashing it in. There's nothing with Doge that's a long-term financial investment. It's the same thing with, on the other side here, SGSI. This isn't a long-term financial investment for me. I don't even know what they do. I don't know what their financials are. I don't know how good of a company they're going to be. But, I bought and I sold half. I'll let the rest run for a little while. If we start to see it come back down here, I might sell the rest of it because I'm not tied to it. There's no reason for that. Now, if you look at like Apple, let's take a company that everybody loves and knows. And I'm going to take a bunch of this stuff off, though, just so we can look at it purely as Apple.
Well, and I'm going to be honest. When we start talking about crypto, I have some exposure with crypto, but in a lot of respects, it's like talking about Pokemon cards or some of those types of things to me. It's a foreign concept, and so like I wouldn't know.
Well, if you just look at the
shiny,
the reason I brought it up on the Doge side is because when you look at the GME side, they're not buying it to hold it forever. I mean, you can't continually buy something to just keep buying it and not ever sell it in that scenario, especially if you're not, because they're not buying it because GME is this great company that, there's all these fundamentals that are going along with it. It's going to be amazing. No, it's purely a get everybody to buy as much as you can and let's screw over the ding dongs, the hedge funds, right? Mm-hmm. So if you're being smart in that scenario, you're not going to buy and hold that because you drop down 70%, right? So, what's the point? Where's that? That's where, when you start listening to those people, it's like, where's the exit point? They want to buy to 1,000. They want to buy to 1,000. Well, they got close to, 500. That's halfway to 1,000. Are you still holding? You still think it's going to go there? I'm not the kind of guy that's going to bet on that, on just other people trying to pump it up for just, there's no reason to it, right? Apple is a company that you want to buy and hold, in my opinion, because long term, I mean, it's got more money than the U.S. The products are used by virtually everybody. They've got a hold on the cell phone industry. They're starting to get into content now, and Apple TV and content's king. They're going to do driving, self-driving cars. I mean, great. This company is going to keep going, and it has. You just watch it; it just keeps going up. Just so buy the dips, right?
Yep.
So if you're investing in those things like a NAKD, right? So NAKD's another one too. Like, I mean, what's the financials of NAKD and where are they going to go with their company and how are they going to work it?
Well, they're going to be dumping all their retail locations is what they recently announced, which coincided with the overall increase in the price.
But is it worth that? What was the percentage increase? A 500% increase in like 2 days?
Yeah, when they announced it, they went from 40 to 80, and then after they went to 80, then it jumped up to like 340. So it was from the day that they announced it, they closed all the retail locations. It jumped from like in the 40 cents up to 80 cents in that day, and then after that day, it was like, why are we continuing this run? This is a continuation beyond.
Well, you look at just from the middle of November to the peak. That's a 4,000% increase in a month, in 2.5 months. Like nothing is. Just, why would you continually hold that? Like,
well, I'm continuing holding.
No, but you sold some though.
I did, yeah.
So I'm just saying, and the people that are holding for this, like these are not stocks that I'm gonna buy all of it and I'm just gonna hold it, even if it goes to zero.
Mm-hmm.
Why? I don't understand that. You took profits and you're a buy and hold guy.
Yeah, and I didn't, like I said, I don't feel comfortable with the profits that I took in a large amount based off of the short-term holding tax that it has on it. It creates a taxable event that I don't like. And that goes back to my own personal thing, is that anytime you make a sale, you got a taxable event that is then created. And so if you're going to be creating a taxable event, you might as well create it at the least amount of taxable event that you can have.
Well, I mean, obviously, I disagree on that end for certain parts of it. In my holdings, I have my long terms in what I want to hold for at least a year, so that will be short term. But in between there, because I'm a single income family, and that's me, and that's my trading. So I can't not sell anything and then just continue to live life. So because I have everything invested. So ultimately what I'm looking at doing is everything that I sell turns into income, right? Essentially. And then at the point in time where I need more, then I can sell more of that down the road if it's long term, if I need money to buy a new house or whatever is going to go on there. But, I mean, there's definitely scenarios for people to sell it if they don't, if it's not something that they need for long term.
No, yeah. Well, and I'm not a sophisticated trader like you are where I can understand exactly that it's going to be better to sell right now versus holding it longer term. I'm not that smart. I just resign myself to the fact that if it is something that's more short term, I'm just going to have to sell part of it now and then wait for the long-term events to play out. That way it reduces the potential tax holdings for myself.
Well, and I think part two, when you look at a scenario for anybody, even if you're a long-term holder, is if you're investing into something. So when I take my portfolio, right now I'm in a bull market. I want to be as close to 100% invested as I can be. And then outside of that, I use margin or leverage. So margin being your money that they're going to lend you through whatever account. And then I use that. I don't want to hold on to that. I think, your traditional exchanges are like 6 or 7%.
Yeah, depending on how much you
have out, right?
Borrow, yeah.
So, for me, it's like, okay, I can buy something and maybe it'll go up, 20 or 30%. But then if I keep holding, I'm still paying 6% on that 6% every year. It's not a long-term hold for me, and it's their money. It's not my money. So for me, I can see in a scenario, if you're looking to trade or to create more income for your family, if you have enough income, then you don't need to do that. But if you need income for your family, it's a great way. You can use that margin because you have your long terms over here and use that margin for those short-term trades. This is what I do. This is my personal, how I do it. And I do my short-term trades. And that's my income. So, because I'm going to pay I'm going to pay the regular income on it anyway. So,
yeah, and I'm certain you've done the math. I just, like I said, I'm not that sophisticated enough because if I look at 20% gains, if you're borrowing on a margin and then you look at the 20% gains, if you got to take out, let's say 10% or half of that, 45% of that for your taxes, and then you got 6% on what you owe for your margin percentage on that. So you're working with, 3 or 4% overall on a 20% gain sale, right?
Well, if it's long term, yeah. If you're doing it for a whole year, you're paying 6%.
Okay, so what is it then on a monthly? What's your monthly fee on it? I don't know because I don't play with margin.
I don't. So I barely have any margin on my traditional account. So on crypto, I'm paying 0.02% every 4 hours. So it's going to add up after a while. So
yeah, I don't know. I did that's where I would look at like if I was looking in the overall markets. That's why for me personally, I just look at holding. I don't invest with margin and I don't invest with stuff outside I try to limit the taxable events within a year. If it's outside a year, then I'm looking to reduce my overall tax implications.
And you should. If you don't need it, you should. There's no reason to continually create a larger taxable event. That's one of the reasons why I want to get 8 Legs Black on here. Blackburn.
Yeah.
He's going to talk to me about a lot of the tax havens essentially that you have for starting a business, and you can push out taxes for like 10 years. There's a whole bunch of stuff to it. I don't know, so I'm not even going to talk about it yet, but hopefully I'm going to get him on here and he's going to be able to, if I can keep him focused, because that guy's got a lot of information in his head. It's great. But I really want to know more about that, and he's going to help me with that because, I hate paying taxes just as much as the next guy, but there's certain areas where I'm at in my personal life that, I need to sell so I can, live.
Well, yeah. And I just got instead of investing to pull it out, I've just got stuff sitting on the sideline to live off until I get to that time frame of, having it be invested for a year for the other stuff. So it's just sitting and having a pool of money to utilize for, your typical everyday expenditures, and then having, allowing the flexibility in the future for the sales of long-term gains on that type of stuff. Well, it's hopefully long-term gains because goal is to always have the gains, but you just never know exactly how it's going to play out. These things could go up, they could go down. It could, who knows? Wall Street bets could do something crazy. You just never know.
Have you used Reddit before?
I looked at it briefly.
I've never used Reddit. I've known about Reddit forever. I've just never used it. I get in here and I just get like, what am I reading here? Where's the information on this? And it just seems like a complete, like, an utter mess. So anyways, I don't know. The one thing I want to talk about is this. So I'm gonna switch a little bit. I don't know if you read this. It was posted in a Discord. And so MicroStrategy, this is my bullish case, which I've already been bull for Bitcoin, but the MicroStrategy is basically holding an event with a whole bunch of your top crypto exchanges, and your businesses your corporations are attending this, and he's teaching them how to buy Bitcoin with their cash, how to use their cash, because literally MicroStrategy used all their cash and bought all Bitcoin with their cash, and then they took loans out to buy more. And so people are like, well, how do I do it? Why do I do it? Where's that? So he's holding this huge symposium February 3rd, and I think that goes through the 4th as well. But basically talking about how these corporations can use their cash to buy Bitcoin.
So they're kind of committed to making sure that Bitcoin keeps going up as much as they possibly can by bringing more people into the party. Why wouldn't they be? Well, yeah,
they have all their cash into Bitcoin.
Plus, they borrowed. It's like
they just bought 10 million more today.
It's like the hedge fund managers looking to have it go a certain direction. So they've got an invested stake in making sure that it's going to go one way.
Yeah, MicroStrategy just bought, I think it was 10 million more. It was today or yesterday. And I think they're averaged in at 16,000 per Bitcoin. And they have 1.1 billion, I think is what they have. But this is a pretty big deal when you talk about, getting those corporations. And that was, when you look at Bitcoin, let me pull up the chart, because that was that little bump we had a little while back. We call it the Elon candle, right? This weird rip up. Elon tweets, he puts out there, Bitcoin was the only thing in his Twitter profile, like the little Bitcoin symbol. And, it just ripped up after that, all the way up to, 38,000, 38.6-ish, and then came back down. But he's already shown interest before this of, he had a tweet, back and forth with Michael Saylor of MicroStrategy of, can you do this? Like, you can do this? As a question mark.
Yeah.
And he's like, yes, give me, DM me, I'll let you know how, that kind of stuff. And it's like, okay, again, that's something it would be a hype situation if Tesla comes out and says, oh yeah, we put 5%, 10%, 1%, whatever amount, doesn't matter, of our cash into Bitcoin holdings. And then you just start to see other companies fall in line. I mean, Square was one of the big names way back in the day last year. 50 million, I think they put in of their cash into Bitcoin itself. But that is part of my bullish case for these large companies need Bitcoin to be at a higher price to put the amount of money that they're going to be putting in. If you just talk about 1%, that's billions, trillions of dollars if these companies start to come in, and at $35,000 per Bitcoin, that raises the price a lot if they all start to come in at one point in time. So really having Bitcoin over 6 figures it makes much more sense at that point in time that it can be there, especially if there's a hedge for these companies to start investing into Bitcoin.
So you've got a really good case built up for a bull case for BTC. Is there ever a bear case that you build up for yourself with talking about these types of things?
I think my biggest bear case is, we can talk about that same thing. If the SEC comes down and they say, oh, you can't invest into cryptocurrencies as a company. You cannot use your cash holdings because we're labeling cryptocurrency as an X or whatever, and they make it illegal for those companies is one. And nobody said anything yet, but that's definitely something. Or in the same side, if they say personally you can't own it, there's the old the government back in the day says you can't own gold, right? You have to turn in all your gold. Well, what if they do the same thing with Bitcoin? Well, that's pretty bearish in my eyes. You'd have to see some sort of news along those lines. Miners are pretty profitable right now, so I think I posted on the Discord. There was a whole tweet storm. It was really good. It kind of talked about how you can watch the miners, their profitability and the amount that they're holding in Bitcoin and the relative price action that's going on in there. And if for some reason we see a very large, drop for some reason, it puts them into a disadvantage of being profitable, you're going to see a lot of miners coming off the table there. We've had that in the past, and it just corrects itself. But maybe something along those lines. There's always little things that are out there, but that's why, for me, because I'm invested in it more than most people, is just keeping my eye on it. Like, what is out there? What's potential news that's coming down the pipe to really dip it down? So.
Well, yeah, because I mean, there's news that could dip down just about anything that's out there.
Mm-hmm.
I mean, obviously, so being in position to make the necessary changes that are out there, those yellow lines look nice. I mean, obviously, if it just keeps on,
keeps on going, right?
Just keeps on going. I mean, there was that event in October for some reason that just throttled it right on up to 41.
Well, I mean, it was basically you looked at your high level of volume in October was tied in through, I mean, you only had 2017 when it hit its all-time high was only a little bit above it, and the same thing here. So there wasn't a lot of resistance in terms of original sell pressure that was there. So once you bypass that, then we had a nice rip up to the all-time high, and then it was just a matter of a couple weeks before it ripped up from there. So that's when you see a lot of any NEC really, it starts to go past its all-time high. They get a lot of volume that goes through it because there's no sell resistance from beforehand of people purchasing or buying or whatever that goes on. So you have a lot of like blue sky growth in a sense.
Yeah.
But the reason I pulled it up long-term is to look at some of the just most recent big dips that came through, obviously in March, when everything ripped down, and a lot of people ask me, well, why, if Bitcoin is a safe haven, why did it rip down? And everything ripped down, including gold, silver, everything else. And it really came down to what I understand as people being over leveraged. And as you start to dip down, you have to pull from somewhere else to cover your leveraged trades. And so you're going to take from places that are first and foremost that are your higher risk that you want to close down, and Bitcoin being one of those. You take those out and you push them through, and then there's a cascading effect that comes in on top of that as well. And we saw that on BitMEX. I never traded there, but being able to watch it, I think it almost went to zero. Like it actually went to $1, I think, or something crazy, because they just had this like cascading. It was almost devastating to the point where, I mean, that's the whole exchange. They're under investigation now, but there's those events that happen, and that happens with anything across any board. And I put Bitcoin in with the, when people are investing it and putting hundreds of millions of dollars into it, it's up there with the big boys. So you're going to have some bigger news to be able to take it down, just like anything else.
Oh yeah, definitely. I mean, like I said, I just don't understand the crypto world. I never really have. You tried to explain it to me, I think 1,000 times, and I'm exposed to it, but I honestly, I wouldn't be able to tell you based off of anything that pops up here why it's the earnings or this. That's the whole deal to me. It doesn't have earnings. It doesn't have any of the other stuff, and it's just like talking about currency. I'm not currently trading in any type of fiat currency either, or money markets or any of those types of things, because I don't understand that.
But why did you buy Naked? I mean, do you know what their earnings were?
Yeah.
Same thing with Bitcoin. Okay, I got
you. You told me to. So I bought it, and then I sold it the next day after it
I didn't tell you to do anything because I don't give financial advice.
That's true.
I might have suggested that I was going to get into it.
You said your chart looks pretty sexy.
It looks pretty.
Yeah. It was like, oh, this is. I think you actually got a better point than when you bought in at like 6 cents, and then I was like, oh, look at that. It went up to 12 cents. I'll buy it 14. So I scary bought at the 14 cents, and then I think the next day it jumped up to like 28 cents, and so I sold at that point, sold half of my holdings in that, and I was like, well, it was a very minimal investment all around.
Yeah, I bought here and I sold here.
Yeah.
So I didn't ride this whole thing up, and those, I always look at those like, oh, if I wouldn't have sold at that point in time, would have had another 400% on that. I didn't have a couple grand into it, but that would have turned into a lot. But again, and you've stated this before, when do you sell? It's hard to tell.
Like you just never know, because this could take another little run too, with people saying, oh, as they increase the shares on Robinhood or whatever, for any of these, like Naked was down, I think, earlier today into the 70s. And so
75.
So, and already it's back up to 104. So what's the real amount that it's worth? Well, we don't know. Is it going to get another one of these fun little pumps that people find interesting or fun to do over time frame? I don't know. I already got my good till close orders in.
There you go.
I don't really, the day-to-day pricing of it doesn't really get me one way or the other. But that dude making, 40, I think he was up to 50 some odd million at one
on
point.
GME?
Yeah.
The GME guy? Yeah. I mean, he made a boatload.
Yeah, and I'm not going to be that dude. I'm not that smart. So I've resigned myself to the fact that it's going to take a lot longer for me to build up that type of growth and overall amount under management for me to get to that level. It's going to take a lot of practice, training, of patience, more or less, of being able to just stick to what I know, be able to weather the storm of the downs, and not lose my head whenever it goes really high on the ups, and feel like and fear sell just for trying to capture short-term profits.
Look, there's a lot of money to be made. This is I think we have an option in SI.
Yeah,
this is a nice one. But I mean, I don't know. I'm just excited for the time. I'm a trend guy, so I'm gonna just follow the trend as far as I can go, and
trend is your friend.
I'll sell at some point in time, and then I'll buy something else and sell and buy something else. I don't know. Maybe I'll buy an apartment building.
I laugh because I don't. For me personally, the real estate stuff doesn't appeal to me nearly as much as this, just because I know what the value is, and I don't have to collect rent, I don't have to do tenant improvements, and I don't have to worry about the financing, I don't have to worry about any of the other stuff. This is all stuff that I could check. It's, at least in the regular security markets, it closes at 1 for me, and if I'm up at 6:30, it starts at 6:30, and it's mostly a 4 or 5 day a week type of thing.
Well, and because you're not selling, so
nope.
Unless you're bringing in other cash from somewhere, you're just watching your stuff grow. So
yeah, for the most part, that, having the fact that I sold last week a little bit in the Naked, that gave me a little bit of extra stuff that's sitting on the sideline right now, a little bit extra cash that's sitting on the sideline. Well, now I've got to find a spot to put that, because that's the biggest problems that I look at is anytime I do a sale, I've created it's now forcing me to be able to find an allocation for that sale, for those funds.
Yep.
And even in that regard, that doesn't necessarily provide me the best mindset, because I'm then trying to decide am I over infatuated with a certain product or a certain stock or a certain whatever. And I think at least for the month of January, I was very infatuated with a certain holding, and I'm not good with stocks. And so I fell in love with a certain stock, and it's good, bad, I don't know. We'll see how it plays out. But
what was it?
BXRX.
Oh, yeah.
And so I fell in love with it. I don't know why. I just did. And so I don't.
You told me a lot about it. It
I
made
do.
a lot of sense.
It makes a lot of sense, blah, blah, blah. But it's one of those things where it probably looks like trash on the overall charts. It probably looks like garbage on everything else that's sitting out there. But for some reason, I just think that in my time frame of holding, which is a year plus, that's where I typically look to have my holdings. If I get overcommitted in those things, then I know it's dangerous for me to be looking at that, unless it's an index-tied fund, something that has more than one individual holding that's a part of it. So creating those sell points from last week and then looking at the future of, okay, well, now what do I do with these funds? Everything that I currently hold that are index funds or leveraged index funds are near or at their all-time highs, except for a few of them. And so that creates an additional uncomfortableness on my part of having to allocate those funds somewhere else, as opposed to typically what I like to do is if there's something that I like to buy, then I create the sell at the time. So I find something that I want to buy and then create the sell after I found that thing that I bought, as opposed to now where I have that sell of something. Now I have to find that something to buy. So that creates the uncomfortableness.
It's another patience game, right?
Yeah, exactly. I've got to wait for another pullback, I guess. And so I don't know. I should have bought last Friday should have bought some stuff there's a pullback on DPST. There's a pullback on
T-Quiz,
Fangu pulled back quite a bit, but the biggest one that pulled back was Soxel. That one's not on your little.
It is. It's right here.
Okay, so that one pulled back to in the 4s, and with the shortage in chips and everything like that, it's.
Oh yeah, that was a 25%.
It was close. Typically on those, if I'm already committed to something, I'm not looking to get back in until it dips more than 50%.
Because they're three times there. So I mean, the 25% those are going to happen way more often. So
exactly.
Well, I mean, there's a lot of stuff to unpack and a lot of stuff to look at, but I mean, everything's long.
Everything's long for me.
It's a long time. I mean, I'm long until they tell me not to be long.
Yeah.
So we'll see. My guess is March, April, we'll start to see a decent pullback just for.
How much are we going to go up by then? I don't know.
I don't know.
You could see a pump here of printing money that runs from now through April. May.
Ride the wave.
Ride the wave, and I don't know. I guess more or less, it's interesting watching everything play out the way it is right now, and we said that at the start of the year. It's going to be interesting watching this whole thing play out, and sure enough, that's what it's doing. We're getting these fun little runs of GMEs and your AMCs and your NAKDs and your whatever else that are out there that are getting these pumps.
Let's see what's pumping today. I haven't even looked at FinViz today. I was busy doing crypto stuff this morning, so let's look at our volume. Sundial, well, they've already pumped. Let's see, AMC's up there, NAKD's up there. Oxygen, we pulled that one up. I'm in that one. Nokia. Wow, that's an interesting chart. I want to look at that one real quick. Nokia.
Well, you were in that, or somebody was in that in the past. I want to say last year.
We traded it. I know I traded it before. Damn, look at that.
Oh, that was somebody's pick for 2020 was Nokia, wasn't it?
Yeah, I think it was Brian.
Brian's pick. Yeah, it was Brian's.
So, I mean, look at that thing.
See if he would have bought last year.
That's only 132%. That's nothing this day and age.
And that's the whole deal of like going back to the intelligent investor viewpoint. For a year, they were talking about 5 to 7% growth, and now we look at what's a realistic growth percentage in a yearly basis. And if we aren't getting 40%, 50%, we had a really down year. Well, now you're looking at stuff. If you're not getting 40 or 50% in a day, you're almost disappointed.
Well, I don't know about that much, but definitely when you're looking at these things and the way stuff goes up, I think most of the volume today is sell volume. You can see on the side here, but with all the GMEs and the NAKDs and all that kind of stuff.
That's all you can do, right?
Well, now it's a buying opportunity, apparently.
Buy. So. What's that 51? Oh, GME is at 51% there.
Yeah, GME's 51. AMC is 41. And NAKD is 27. So
it's an improvement from earlier today on NAKD.
Yeah, well.
I bought it for Fredericks of Hollywood, right? It's one of their holdings underneath it. They actually have quite a extensive line of fine undergarments for men and women, I guess. I
love that you're talking about it like you actually know what it does. Good job.
I've looked at a few pictures to know exactly what they have. So
with that, I think we end this podcast today. And you can imagine all those fine undergarments that NAKD is giving to people. So
no longer at retail stores, though. You got to order them online.
That's the only way. Direct to consumer.
Yeah.
All right, guys. Take care.